For the longest time, I was only interested in things that paid a high dividend yield. And then I started running into some growth ETFs that really perform well, no matter what the market is doing. So today we're covering one, ticker SCHG. Now you're probably familiar with SCHD, but this one is different as it pays a significantly lower dividend and is focused primarily on growth. It's the Schwab US Large Cap Growth ETF. We're going to cover the breakdown on what this fund is, how it's different than SCHD, and if it's worth investing in based off of putting 10K into this fund and seeing how well it would perform. A lot of factors go into this, so I appreciate your guys' support in me making these videos. If you're interested in growth, in dividends, in making money in the stock market, you're in the right place. Don't forget to like the video and to subscribe. And if you're interested in our giveaway on the large channel for this account, don't forget to check the description down below because you can win up to $150 for nothing, for simply entering the giveaway. I appreciate you guys so much for watching. Let's roll the intro. We might even be buying at a discount because SCHG is down 8% in the past month. On the past 6 months, down 3.88%. If we jump to the 1 year, it's still up almost 8%. The 5 year up 163%. And all time, it's up just under 700%. Been trading since 2009. Now, I mean, this thing has been absolutely insane, but we are seeing a bit of a pullback from what? About $28, $28.50 down to $25. Maybe I'll scoop some shares up. I'm interested, if you guys do own SCHD, would you be interested in a growth fund, not dividend focused? Because I wouldn't mind having a little bit in each of these and seeing how they compare to each other. You guys know that I'm a fan of diversification, and SCHG versus SCHD. I don't know if I can pick a winner, even though I am primarily a dividend focused investor. Let's check out the website for SCHD and see all this fund has to offer. So Seeking Alpha gives them the grade of an F on the dividend yield because it's 0.45%. Growth rate is decent, though, at 13.5%, which is very interesting. If we look at this over the long term, we should be able to see their CAGR. Oh, you can just see per year the amount of growth and year yield. It's kind of all over the map. And again, this is all going to depend on what they're holding in the account. So average, it's paying out 11 cents per year, which is not great. Last dividend was 3 cents. And you can check the dividend histories over time. Of course, they range 2 cents, 1 cent, all the way up. Some special. Looks like they're all regular dividends, actually. I'm not sure. It does pay quarterly, so you're also getting it only 4 times a year. So you're getting your 3 to 5 cents 4 times a year off of initial investment of $25. Not a high yield. You know, they did just do a stock split. It looks like interesting. They did a 2-for-1 in 2022 and recently a 4-for-1 in 2024. So very interesting that they're working that into it. Something to note. Typically, people have different opinions on stock splits. It looks like it was a pretty solid move. I don't hate it. Dividend-focused investors sometimes will dislike it because the price will continue to fall. They'll split. The price will fall because the NAV is underwhelming. But SCHG is definitely not doing that. So let's check out the insane returns on a drip calculator, and I'm sure you guys are going to be surprised by this. So here's the most recent fact sheet for ticker SCHG. I'm going to try not to say SCHD again. They're so close that it's difficult not to. But check this fund out. Total net assets, $37 billion. That's absolutely insane. This thing is huge. $37 billion and a low expense ratio, 0.04%. So here's what they say the fund investment objective is to track as closely as possible before fees and expenses the total return of the Dow Jones U.S. Large Cap Growth Total Stock Market Index. It highlights a straightforward, low-cost fund offering potential tax efficiency and can serve as part of a core of a diversified portfolio, ding, 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 diversification, simple access to the large cap U.S. equities that exhibit growth style characteristics, and stocks are classified as growth based on a number of factors, they say. So we can see 3 months, 7%, year to date, 35% in price return, 1 year, 35%, 3 years, 11%, 5 years, 20%, 10 years, 16, almost 17%, since inception, 16.6%. Pretty solid. Definitely no complaints there. You can actually go through and check their turnover rate. 1 year trailing is 20%. So turnover rate, and correct me if I'm wrong, is the rate in which they're swapping out stocks in the index. So if this is tracking, the Dow, then it's probably just based off the Dow itself and what they're doing. I'm not sure if they have any control in that or if it's different, but I would imagine, It's the same. It's just whatever the Dow is doing. The fund category is large growth, and yeah, just large and growth. Not blended, not value, large and growth. We can see the NAV, the market price. There's a lot of good stuff on here. I definitely recommend you guys check out the websites for these funds if you're ever going to buy into them. There's a lot of good information on there, and it just helps you kind of learn what to look for, learn what you like, and learn what you dislike, which can be just as important. Don't forget that. Then we can see the sector weightings. So information technologies, almost half. Consumer discretionary, communication services, healthcare, financials, industrials, and then they go down lower and lower and lower. Top 10 biggest holdings: Apple, Nvidia, Microsoft, Amazon, Meta, Tesla, Alphabet, Broadcom, Alphabet, Eli Lilly and Company. Meaning, one interesting thing is, if you guys have heard of the Magnificent Seven, this is all of the Magnificent Seven in here, which is crazy because you have Apple, Nvidia, Microsoft, Amazon, Meta, Tesla. Okay, maybe there's only 6. I always forget the last one. No, Nvidia's on there. I said that. So they're all in there. It's very, very interesting how it kind of copies that. That's the largest percentage. I mean, Apple's almost 12.5%, and Nvidia 11%. So Tesla is lower, under 4%, which I understand because it's a lot more volatile. So they usually kind of shy away from having large positions in it because when Tesla falls 10% a day, which it has been known to do, I'm not bashing Tesla. I usually buy it on those days, but it has been known to do that. It will really affect the overall return, and people can get spooked out of funds just like this. But it's pretty diversified. So again, the fact sheet's important. Check it out for yourself. Let's check out the dividend history. Even though it is small, I think it is important. And then we'll look at that drip calculation. I don't know if you guys are ready for this. SCHG in the drip calculator. So dividends are being reinvested, but it's a low yield. So the difference is kind of negligible. We can see though, 10K invested in 2010, it's been 15 years, would net you a 764.6% return. Average annual total return, 15.21%. Absolutely near record highs. Your 10K with dividends reinvested would be worth $86,500. Now, with dividends not reinvested, there's a little bit of a difference there. You're looking at a 14.54% return, about a 0.7% difference, as well as $79,000 return, about a $7,000 difference there in total return. So, something to factor in. I do like having drip on, but I am really getting into the idea behind these growth ETFs more and more and more every single day because I do love dividends. I will always be a dividend-focused investor through and through, but I like having a mix of everything just because you never know what's going to happen. You never know what's going to perform well. So it is cool to be able to diversify with this, but these returns are absolutely phenomenal. If you could get 15.21% in the long term, that would be amazing. And I'm going to show you guys just how much money that could actually accrue because 15% over and over and over and over again is going to be absolutely astronomical, as well as with a 0.45% yield. It is lower, but it will make a definite difference in our calculations, which we'll jump into right now. So this is slightly different than how we normally do it because normally we're looking at the dividend yield, which is still incorporated, but the actual annual price appreciation of the shares is a bigger factor here. So we have 399.36 shares. That's the share price invested. That's about $10,000 exactly. Distribution frequency is quarterly and drip is on. So the dividends will be a small factor of this, but we're really going to look at the growth of ticker SCHD. So in 1 year, your total returns is solid. You're looking at a 15.82% return. Your $10,000 is now worth $11,600, give or take. You've made $45 in dividends, which again, is low because it's not the point of this fund. It's a growth fund. And I know there's a lot of people that aren't interested in growth, and that's okay. Sometimes I like to throw some into different growth funds depending on what the market is doing. But let's see. 5 years. After 5 years, that is now $20,000. So you've doubled your money in 5 years, which is an absolutely insane return. What, a 20% return? They have the total per year, I should say. And you have an average or a total return of 107.5%. You're now worth $20,000, which is double what we started with. And you've gotten $226 in dividends during those 5 years, which again, very low, but not the point. As we keep moving forward, 10 years, your $10,000 is now worth almost $43,000. Like, I want you to think about that. That's a ton of money. Of course, I do not have the tax rate on here, and we are doing this calculation based off the actual return that what we've seen with SCHG. So it could be better, it could be worse. It's all speculation, but it is fun to see. We now make $455. We've made $455 total in dividends in that 10-year, which is kind of funny how little it is. But our return is very solid, 330%. After 20 years, it really starts ramping up, all right? And the goal behind these funds, these growth funds, is to eventually retire. If you could get to the point where you live off dividends with SCHD, you'd have to have a ton of money invested. But between SCHG and SCHD, it's a lot more, there's a lot more possibility of it. But again, after 20 years, our $10,000 investment is worth $180,000. A 1,700% total return. Average annual total return of 15.53%. Absolutely phenomenal. And I like to do the same thing with all my videos where I do 10K invested, where I talk about, let's say you're 25, you put 10K into SCHG, and it performs the same as it has as the average return. It performs the same. How much money will you have? Are we anywhere near retirement? Is it even worth holding? Let's see. With ticker SCHD, 30 years invested, you end up, your 10K is worth $750,000. That's insane. Total dividends is just under 1,400, which is pretty decent for that low of a yield. But wow, total return of 7,400%. I can't even believe that. The growth on this is just absolutely insane. And I really am a huge fan of Schwab, Charles Schwab. You guys know that I've talked about it a lot. I'm just a big fan. But that's how you can end up retiring on this. Now, you won't retire off the dividend, so you would have to do like the 4% rule where you pull 4% out every single year. But that's what some people want to do. Me, primarily, what I would probably do is leave some of that in here, move the rest into SCHD, and see if I can live off those dividends instead of reinvesting them. But there's so many options as income investors, as growth investors, and it's really cool seeing what we'll be able to do eventually. Now, if we bump it up, let's say 5 more years. So if you wanted to retire, let's say you were 25 and you want to retire at what, 60, now 65. If you bump up that 5 more years and move from 60 to 65, we'll end up at doubling. It doubles in that last 5 years. So I want you guys to think about this as well. If you want to create generational wealth, I'm not sure there's a better way to do it. Maybe starting companies, of course, but lower risk in this way. Companies can be risky. You never know how it's actually going to work. Everything's always moving forward. But look at that. 5 more years. If you had waited from 60 to 65 to pull your money out, it's doubled again. And I mean, we can go more. If you invest at 20 and you go till 70, well, we won't do 70. We'll do 60. From 20 to 60, again, you're doubling. Now you're at $3 million. And now your annual dividend income is still $46, which is not great, but you got $3.1 million in the bank. You can pull that out. You can use it to live off of. You can do whatever it takes. That's a huge amount of money. I hope you guys enjoyed this video. I really like these calculations to see exactly how much money we can live off of, what these funds can do based off their prior performance. Of course, not financial advice, but it's just entertaining. It's fun to do. So I appreciate you guys. Of course, don't forget to comment. Let me know what you think. Are you a fan of SCHD over SCHG? Do you have both of them? I'm always curious what the investors are doing. As well, if you haven't entered the giveaway on my main channel, check it out. I'll link it down below the video you need to go to. Really, really important. It's going to close soon because we are reaching 10,000 subscribers on that channel. I appreciate you guys so much. You have been so supportive, and I can't even believe it. We're almost to 10,000 subscribers. Absolutely amazing. If you liked this video, chances are you're going to like these popping up on your screen right now. So check them out. Let me know what you think, and I hope to see you over there.